Okay, so this is the second part of cycles and cycle trading. Previous one, just quickly to repeat, we talked about the basics of the cycles, the types of the cycles and what each represents, how it looks, and what we are looking to do there. This part would be on false breaks and convergence and convergence principle. And the last part, part number 3, later on today, would be about how to put it all together. So let's begin then. Today we will talk about what is a false break, how do we trade the horizontal false break, and how do we trade the trend line false break. So first of all, what is the false break? This is a failed attempt of price to successfully break a level of support or a resistance. In other words, below the last important low or above the last important high. Failed attempt means the price is trying to break the given support or resistance, and then it will immediately retrace. So it tries to break up, retrace down to close below the level it tried to break, or it tries to break down, retrace up to close above the level it tries to break below. The most important thing to understand, the close has to be on the time frame that the false breaks appear. So if there is a false break on a 4-hour chart, don't go to 1-hour chart to look for the close of the candle there. It has to be on the same time frame. That's how it looks like. Okay? In this case, we have a support zone which the price respected few times. However, bears or sellers attempt to break it down, and they do for a short period of time, but then the price jump back up and close above the level here. Tries to break it down, right? And retraces up to close above again. This is unsuccessful attempt to break down, and that's what is called a false break. That's why it's false. It's a false break. Okay, it's a fake attempt to break a level. That's how it looks on the chart. You can see we've had here a support, right, which also was resistance many times, many spots, and here it is trying to break and retraces down to close below. Okay, now that could be a very important support. That could be also just a high or a low, which we call important, and I'll show you in a few minutes what we call important high and what not. So there are two types of false breaks, horizontals and trend line. Before we move on that part, I want to go and repeat once again the part that I showed you in the first part, our first webinar, and this part is called the 2 candles principle. And I'm talking about that once we have a correction, okay, correction has to be here, right? It has to be below the last 2 candles low, last 2 candles of the previous move. So if this is a correction, correction to what? Correction to this up move. It has to break below the last 2 candles low. What are the last 2 candles on that move? this and this. Last two candles that create higher highs and higher lows. That's why they are the last two. They are still creating higher high, higher lows, right? That's the high, that's the high, that's the low, that's the low, and this is the level that has to be broken, and it is broken. If it did break it, that means that this correction is valid. Now, why do we care of a correction when we speak about false breaks? And the answer to that is because false break has to be between moves, clear moves. So that is a clear move. That now we define it as clear move because the correction is deep enough. That is a clear move. So we have point number one, point number two, and we break above the point number one in clear moves. Now we want the price to go below this level and close below, and then, and only then, we know it is a verified false break. I want to show you this chart, and you tell me, guys, is this a reliable false break now, yes or no? Some say yes, some say no. Who said yes, please tell me why. As we said, this low has to break below the last two candles low of the previous move, right? Sorry. Not this low, right? The low in between the two highs, right? Now take a look. Is this low is lower than the last two candles low? What are the last two candles of this move? These two green and green. This red one is irrelevant. So my question is, was this false break? Was this low actually below this low? The answer is no. Therefore, we still did not have a false breaks here. Good. How about this one? Is that a valid false break? Yes or no? Here. All right. There is only one guy who said the answer correct. The guy with the birthday. Rudy? Exactly. No, it's not, guys. Why not? This is attempt to break down. So what we are looking for is the correction, which means this high, right? That's the highest price here, highest price of the correction. Did this correction break above the previous move last two candles high? In order to be able to answer that, we need to look on the previous move down. That was the previous move down. The last two candles of it are this and this. That's the last two candles defining lower highs, lower lows. That's ending the move down. Therefore, I want to ask you a question. Is this correction? Now, that you understand, is that a valid correction, yes or no? The answer is no. It's not. It's not deep enough. All right? But here comes the but. I want to ask you this question. Is this a valid false break? Yes or no? Between this to this. Yes, this is between because it is between clear moves. And what about this one? Is this a valid one? Yes or no? Yes. Beautiful. You guys accept the challenge? Let's keep it up. It starts to be interesting. How about this one? Is that a false break? Yes or no? Oops, sorry, my pen moved. This one. Is that a valid false break? Yes or no? Before you answer, guys, think about the correction. We need two lows and a correction in between the two lows. Always ask yourself, the correction, is it deep enough? Yes or no? How do you know if it's deep enough? If it broke above the last two candles of the previous move, last two candles highs of the previous move. What are the last two candles of the previous move that created lower lows, lower highs? This and this. So now answer the question again. Is that a valid false break? Yes or no? No. Exactly. Do you see, guys, how your answer changes? I know it looks sexy. It does. We look and then we say, wow, that's a good false break. We want to trade it. But in reality, when you stop for a second and before you fall down of this beautiful seduction by the market, wait a second. And ask yourself, the correction after the first move, is it deep enough or not? If it's not deep enough, it's not a correction. That's a great question, Rudy. Why it has to be two candles? That's a little trick coming in an option expiration, and how the insurances and protections are written during the option life. I don't know how to explain that by the numbers, how it happens behind the scenes. But after observing that by ears, this is what it is about. There is a rule that everyone teaches, like in a technical analysis, that when you have a move, your correction has to be to at least 23.6 Fibonacci. If it is, that's good enough. But the answer is that's not correct. That's just trying to cover the visual thing. That's not correct. The two candles is. And these false breaks, in reality, can you imagine, guys, how many buyers this place will have, especially when we have a bullish divergence here? Can you imagine how many buyers this place have, guys? A lot. And what is going to happen here? Boom. Stop loss. Okay. Is this a valid false break, yes or no? Before you answer, ask yourself the same question about the correction. Is this exactly? This is not a correct false break. Well done, guys. Now you start to understand. Now you start to understand. How about, let me make a challenge here. How about this one? Is that a false break, yes or no? Do you want me to zoom in a bit so your life is a bit easier? I do. Here I go. Now, classical. No, it's not. Why not? Because there was no correction. Right? That's the correction. Is it deep enough? No. That's the last two candles creating higher highs, higher lows. Not even the red one, as the red one is the same price. That's the last candles. That's what has to be broken. And it wasn't. So the answer is no. Okay? No, correction could be in 2 waves and 3 waves, in 1 wave, that's all fine. No, don't care. We never care about the correction. It plays no important role in terms of waves. Okay, guys? Classical. How about this one? Derek, you said no. Why no? I don't say it's yes. I'm just trying to understand why no. I want to see if your answer is correct or not. Last two candles, classical. Let's take a look on the last two candles. This is your correction, right? So it has to be above the last two candles of the previous move. Where are the last two candles of this move? That one and that one. That's the last two candles created lower highs, lower lows, right? Did it break above this high of the last two candles? Yes or no? Yes. Therefore, this correction is good enough. Therefore, this is good. False break. Is that good? Classical. Guys, pay attention to that. You would be shocked to see how many times you would be able to define a good end of move or good end of correction or not. Is it valid for every time frame? The answer is yes. Take a look on the 15 minutes, guys. Don't trust my beautiful eyes. Take a look on yourself and this side. Always. Is that a good false break here? Yes or no? Actually, that's a good example. So let me just enlarge it a bit. I'll make it like this and zoom in. Here we go. Is that a good false break now? Yes or no, guys? Below this low. Now, think about it carefully because it's very tricky. Let's define that. I want you to listen carefully, please. That's a very important example, guys. Take a look. Our question is what? Our question is this high of the correction is deep enough? So what do? We are looking at what? We are looking at the last two candles creating lower lows and lower highs for us, right? On the previous move. That's the previous move. Right? Where are the last two candles that created lower highs, lower lows? I'll mark two options for you in two different colors. This candle and this candle. Or, that's option number one. Or option number two, this candle and this candle. Who says option number one? Who says option number two? All right. And the winner is number two. Why? Because These two candles, guys, take a look carefully, please. These two candles, they are inner candles. Inner candles, as we said on the previous webinar, on part number 1, do not play any role. Inner candles to this one big fat candle. You see? 1, 2, and continuation. These two inner candles have no impact of changing the move. No way. Inner candle is a breakout candle. Sorry, just a break candle. It has no impact. It's not important. No way, no how. Therefore, these two not important. These two are important. Same here. These two marked by yellow, they are inner candle. They are blown by one big candle here. One big candle, only these two are blown, and only then you get one small candle created the lower low again. Therefore, this is the high that has to be broken. Was that broken? Is that clear now, guys? I know it's tricky. This is why we hold this webinar. So you can go over these things again and again and again and again and again and ask all the questions after that that you might have. But once you master these small tricks, you would be amazed how many times your position could have been saved. And by having good performance, it does not mean we need to earn as much as possible. We have to learn how to lose as low as possible. To win a football match, it's not only about how much you score, but also how much the other team scores against you. Same about the boxing match. Same about tennis match. Same about everything in life. Remember that. Same in trading. These small tricks define the timing. Timing of trading. Remember that. So this is how we define a reliable false break and not reliable false break. Okay? And now we have two important ways to do it false break. Horizontal and trend line. Now, in reality, many trade false breaks in different ways. I personally prefer the combination of false break with divergence. For me and for you guys, false breaks must come with divergence. Exactly like the cycle. Cycle must end with divergence. False break must be following with divergence. Why? Because the divergence show us exactly when it's reliable and when not, in very high probability. So our steps would be: find a strong resistance or support, high or low, wait for a false break to happen, and check for divergence. Those who don't know what divergence is, please watch Divergence's webinar. Alright, and the last one is the candlestick confirmation. So we have the close above or below the last high or low to complete the false break and the divergence. Take a look here, guys. Is that a reliable false break, yes or no? Yes, correct, beautiful. Is there divergence, yes or no? The answer is yes. So you see the MACD, how do we know divergence activated? When the MACD, it was going up here and then boom, ticking down. When it ticked down, we know divergence triggered, activated. Then you are waiting for the false break to complete. When it completes on this candle, when it closes below. So sometimes divergence would be activated before the false break. Sometimes the false break before divergence. They have to be both. They have to be both. All right? Great. Let's continue. False break right here. Is that a good one? Yes or no, guys? Tricky, 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 but the answer is exactly. The answer is yes. The last two candles principle. Where are the last two candles here? This and this. Broken by the correction? Yes. Therefore, it's a good false break. Do we have divergence? We have divergence. Therefore, this is a great sign for us right here on this big red candle. All right? Perfect. Is that a good one, yes or no? Now you should be already mastered. Is that a good one, guys, yes or no? Well done. The answer is yes. Classical false break, beautiful divergence. The answer is yes. How the dynamic trend line, dynamic false break looks like. Dynamic false breaks or trend line false breaks work exactly the same way as horizontal breakouts. The only difference is that we use dynamic support and resistance levels, in other words, the trend lines, instead of horizontal ones. Now, do you see this, guys? 1, 2, 3. There is divergence on the last part, on this correction. It tries to break up and fails and go down. This is a false break of a trend line. 1, 2, 3. False break of a trend line, followed by divergence. Very often traders overlook the trend lines formed for the highs in an uptrend and lows in a downtrend. That's called the alternative trend line. This is the most powerful one. Most powerful one. And there is one trick here. We gotta move 1, 2, 3 of the highs. These distances between the spots have to be equal. They have to be equal. And when they are equal, this trend line starts to have a lot of force, power. When we got a divergence on it, we know we are good to call that a false break. Trendline false break must be on the third or the number 4 spots. So if you have a trendline, when you have 5, 6, or 7 spots, that's not good. False break must be on the third or on number 4 spots on the trend line. The distances have to be visually equal. 1, 2, 3. Divergence. Distances are visually equal. This is a good false break. 1, 2, 3. Divergence on the last part, divergence on the full part. Third spot or fourth spot. That's how we know it is reliable. 1, 2, 3, followed by divergence, giving a strong sign. That's about the false breaks, and I gave you the most important tip there, and that's the last two candles. You know that, you remember that, you practice that. Once you master that, you would start to see the things in a much better color and light. Now we talk about the convergences and convergences principle, which is one of my favorite trading entries. I will explain why. So first of all, what is a convergence? Convergence principle derives from convergence, when the price and indicator moving in the same direction, lower lows or higher highs. Convergence principle, on the other hand, does not require an indicator as a confirmation. What we are looking for is a false break followed by higher high or lower low, depending on the direction of the move. Let's talk charts. Number one, first of all, the first step is to find a good false break. Is that a good false break, yes or no? The answer is, as you already know, the answer is yes. That's the last two candles. This low is lower, so we have high, low, high. That's a false break. This is where it is completed. Convergence principle would be the moment where price would be below this low again. In other words, when a bearish momentum is gained. How do we know bearish momentum is gained? When we have lower lows. So the bears now are strong enough again to create lower lows. This is the principle of convergence. What is a full convergence? Full convergence, not just a principle. When we have the MACD histogram confirming that as well. So this is the low, this is the low, and the histogram has lower lows as well. This is a full convergence. The principle, however, is when the MACD confirmation is not there. What is better? They both good enough. They both good enough. The full convergence, of course, more powerful, but they both good enough to trade, and I trade both, definitely. The only difference is on what level we're going to enter the trades, and this I will explain on part number 3 webinar. How do we trade the cycles fully? Okay, so that's how it looks like. Once again, we had a false break here, reliable false break, and we regained the momentum by creating higher highs. Is that a convergence principle or full convergence, guys? Who can answer my question? Try, guys, try. If you don't try, you only rely on me. Try. You have your opinion. Say that. Is that a principle or full convergence? Exactly. That's a full convergence. Why? Because the MACD follows the chart. higher highs on the MACD histogram together with the chart. This is a full MACD. Principle is the one MACD does not follow. Is that a full convergence or a principle? Full, because the MACD, exactly, MACD follows as well. MACD histogram creates lower lows together with the break. Okay? How about this one? Is that full or principle? Principle, great. Why? Because the MACD here is higher than here. Therefore, this is just a principle, which is good enough, don't get me wrong, but it is a principle. MACD does not show the higher highs confirmation as well. Now I have a question for you guys. Here, just a second. Just a second. Where was it? It ran away from my eyes now. Oh, here. Is that a convergence or convergence principle? And is it valid at all? Exactly. It's wrong. It's not a move. It's not a correction. Why? That's the last two candles we refer. Sorry. My my bad head. I got confused by myself. That's the last two candles. I didn't see the red candle. It did create for us. It did create for us valid correction. I didn't pay attention to that candle also. Therefore, this is a good false break. And therefore, this is a convergence principle. We switch from false break to lower lows, and that means we are looking for continuation with the momentum. How do we trade? Next webinar. What about this one, guys? Convergence or convergence principle? Exactly, full convergence, because the MACD histogram also creating higher highs. Test for you. How about this one? Good? That's the false break and that's the convergence. Good or not good? Exactly. Well done. That's not good. That's not correct. That's the last two candles. And this correction here is not above these two cannot. Therefore, that's not a correction. Therefore, that's not a false break. Therefore, that cannot be called a convergence. You see, guys, how we put everything step by step. Always take a moment and ask yourself the simple questions. The correction good enough, yes or no? Deep enough, yes or no? How do we know? Last two candles principles. We got a false break, we got a convergence. Is the convergence full or principal? That's the steps we follow. Now, on the next webinar, we are going to talk about how do we put it all together. And I give you a hint now, which you will be able to start and remember already. At the end of the cycle, right, when double cycle appeared, for example, the same New Zealandian dollar that we spoke about on the previous webinar, we had triple cycle here on the weekly chart. 1, 2, 3. At this very moment, we know we are looking for sell. At that very moment, we start to look for false breaks. On what time frames, where exactly, I will explain on the next webinar. But, so you have the idea already. At the end of the cycle, when we trade the opposite direction, the correction, we are looking for false breaks. Why false breaks? Because false breaks tell us what? When the bulls become fake or the bears become fake. In that case, we are rallying here. We are looking for false breaks on the tops. To know what? To know at what moments the bulls become fake. And when we can recognize when the bulls become fake, we know that it's good for us to do what? To look for the bearish opportunities, the opportunities to sell. Any questions regarding the false breaks or the convergence principles, guys? I know that it's maybe complicated, and step by step you will learn that all. Is there any question about any of what we've learned in this webinar? Next webinar is going to be full trading steps. How do we do, when, why? Is there any question about this one? Well done, guys. Those of you who took part and answered and tried, very, very, very well done. Of course, that's why everything is recorded. That's the reason. So it's there for you guys. It's impossible to understand everything in the entire logic in one meeting. You need to watch it again. On the second time it will be aha, and on the third time it will be got you, got you. Yeah, of course, Robert, exactly. When I do my analysis, this is exactly what I pay attention to. This is exactly what I pay attention to. Moves, corrections, divergences in between, and with the cycles. When it comes together, that's a monster. And once again, I always ask that. Do not trust me. Trust yourself with the chart. Go and see. Check and understand. And suddenly you will see how everything comes into one piece, one full piece of puzzle. Thank you for being here, guys. I'll see you in 6 hours from now, right? And we continue there when we put it all together. Thanks for your time. See you soon. Ciao for now.